Oopsie. Mic check. Perfect. We've got a microphone working. Let me just make sure everything is set up. There we go. Mic check. Perfect. All right. Good morning, everybody. Hope everyone's doing wonderfully well. It is FOMC day. FOMC is one of my favorite days to trade, as there's a huge opportunity to make some crazy money on some short-dated calls or puts, depending on what the setup is, which we'll discuss a little later. All right, so let's just go through a couple things here. S&P right now is going through a little bit of distribution. QQQ and IWM are all red. Really, if we go to our double screen here, the main culprit in the pre-market, there's a couple culprits. You got Microsoft gapping down this morning. Microsoft closing at 492, down right now 1.67%. Nasty sell on Mr. Softy. Meta also seeing some distribution and sell side pressure. Not a good. I mean, it looks like it may want to come to the gap, but I would like to see it maintain structure above this weekly bar. Okay. But Meta's just backing and filling, going through a little bit of consolidation. Tesla's still holding steady in the pre-market, strong. Nvidia's basically flat. Amazon is seeing some strength, bouncing off that daily chart EMA 113, and Apple's basically flat as well. Looking at Google this morning is basically slightly under some pressure. Looking at our US dollar heading into the meeting, US dollar is still just on watch for a breakout out of this downsloping trend line, hugging that EMA 113. Nothing wrong with the dollar. It is technically holding some support. Obviously, the weekly chart trend is still down on the US Dixie. But we will see if the dollar gets sold into. Looking at gold, gold is just flagging sideways as if it's going to pop out of a bull flag. Gold is still looking like a beast right now. When we look at silver, silver is just on another level. Looks like silver might be trying to put in a little bit of a near-term top today. It's certainly extended. This is one that I think can come in, and there's a short trade. There's actually a swing trade short developing on silver. It's very aggressive, but silver blasting through that previous all-time high. I think there might be a nice 1, 2, 3 bar surge on the weekly, kind of this double top, starting to get that negative divergence on the RSI. So silver, I think, is getting close for, say, 7 to 10% pullback. All right, let's look at the yield markets heading into this Federal Reserve meeting. You can see that the 2-year yield is trying to form a little bit of a inverse head and shoulders. So that pattern has not triggered yet, but it's getting somewhat close to triggering. We will certainly watch for it to see if it wants to firm up and break out of that neckline, but it's right at the neckline. It's so funny how these patterns have a tendency to just be right at the breakout point or breakdown point ahead of a major meeting. So 2-year yield still looks fairly strong. You got to be mindful of that. We'll discuss energy real quick. Before I do that, I gotta plug in my AirPods here. All right, crude oil. Crude oil, we do have inventories today, guys. So this is on watch around 10:30 for a potential trade setup. My bias for crude is still basically to the downside, but it is oversold. So I wouldn't mind if the report comes in decent, catching a little bit of a potential long scalp. So crude oil inventories will be on watch today. All right, 10:30. Someone remind me. if I am not tuned in, but I should remember. And you can see crude oil, guys, forming now this short-term wedge pattern. I'd love to see it hit the bottom of this wedge for a bit of a long scalp. Natural gas got absolutely slaughtered again yesterday, and now it's starting to actually bounce off of a major 382 fib level. So really, really decent support level. This one could bounce all the way back up to 464. And, this could even bounce there today, just with how crazy of a move this was. I mean, simply put, guys, natural gas high pivot to low pivot. That was a 20% correction in 3 days. My only regret is I did not hold my KOLD for the full move. I mean, we were accumulating down here sub 20 bucks into this gap fill, and look at that, boom. Monster move on KOLD. Nevertheless, we made profits. I know some people took put options in UNG, which was an absolute, it just felt like a fucking, I don't know what it felt like, but damn, that's crazy. Crazy movements in the commodities. Let's look at uranium here. So uranium is actually looking pretty decent. It is trying to put in a bull flag right on that point of control inside this green bar candle. As long as it remains inside this green candle, I think it's setting up a bit of a breakout attempt. The only concern I have with this potential pattern is you're backtesting that neckline, right? So you have this major head and shoulders. You have these two little pivot points. This is your retest breakdown, retesting that neckline yet again. So you're technically at some resistance, but it is forming a little bit of a bullish pattern to get through that. So names like SMR are still looking pretty constructive. I do hold long exposure in SMR into 2027, so it's a farther dated position. Oklo's not looking too bad either. NNE trying to shape up some strength. So nuclear stocks you should keep on watch, all right? Let's go through some of the high flyers today. Well, we got GE Verona raising their guidance. Stock is breaking out and gapping up. Look at that beautiful bull flag. Rounding base, bang. Just ripping to a new all-time high, 689.50 for GE Verona. Pretty crazy move, if you ask me. But again, Wall Street loves when stocks raise their guidance, especially when it comes as a surprise. There will be some resistance here on GE. I would look for a short off 700 today. So that one is actually an interesting short setup, guys. GE Verona. Let me just see where it hit. Yeah, so 700 looks decent to me. Psychological number. I don't mind that at all. All right, what else we got moving here? NBIX, Neurocrine Biosciences, Aventor Paycom. Let's look at Paycom here. PAYC. Nothing to do there. MRVI. Nothing to do there. PNR, some laggers. You did have GameStop report earnings yesterday. GME. GME is gapping down a little bit. I know a lot of people are getting excited with this breakout. Oh, the next squeeze is here, and then it just absolutely crumbled. All right, Carvana's been another interesting one. I know a couple people have started inching in on the short side yet. It's getting close. Today might be the day. I was hoping for one more sweep of the high. We might still be able to get it, but definitely Carvana. I mean, getting super interesting for a little bit of a swing short, that's for sure. It's getting very interesting. Let's look at GTE. GTE, that stock is still holding. Let's look at Mama. Mama's Creation. I don't even know this stock. Jeez, 502 million. That's crazy. Rocket Labs this morning, guys, is still seeing some strength. It is coming off of the highs a little bit, but Rocket Labs has had a beautiful move off of the lows. We're long Rocket Labs with our investing group, so If you've been accumulating Rocket Labs, nice position, nice job. We're up double digits already, just pushing up 16%. Actually, we're a little bit more up. We're up about 17% or so on our Rocket Labs position, so good job. This one I like for a long-term hold. Should it get a little bit of a pullback? It probably is due for a little bit of a pullback. You know, you're getting pretty stretched from your 7-day moving average, but this one has a tendency, guys. If you look at the weekly chart of Rocket Labs, what we could be setting up here, guys, on Rocket Labs is notice the structure. You got that bearish cross of the 7 and 20 on the weekly over here. And that indicated a little bit of a near-term bottom was being established. So when you got the bearish 7 and 20 cross, you had 1, 2, 3, 4, and then your fifth week marked the low. Well, we got the bearish cross a couple weeks ago, and now you're just ripping back higher. So once you got that kind of breakout through that weekly 7, which is this candle here, look at how price action Rocket Lab just grinded the weekly 7 higher and higher and higher. I mean, when you bumped through that weekly 7 moving average, Rocket Labs ended up squeezing 187%, 35-point move. Imagine we do the same sort of thing. A symmetrical move would take us to roughly 84 bucks using that previous that would be crazy, but it can happen. It could certainly happen. All right, not really seeing too much again. I think the morning session might be a little lackluster in anticipation of the Fed. That's definitely the bigger trading opportunity in the afternoon, guys. Two chances. You get the initial small reaction off the 2 p.m. interest rate decision, and then you get the bigger Powell move. Really hoping for a bit of a gap down today, or a bit of a sell-off, but we'll just take it in stride. We will take it in stride. Got some strength in China today, guys. BABA, BABA, which has been going through kind of this very downside chop, is seeing a little bit of strength today up to 159.20, trying to recapture its 7 and 20 moving average. Warner Bros. WBD, that's up again in the pre-market, another couple percent. That one just keeps grinding higher and higher, but fairly muted this morning across the board. PLTR seeing some strength. Let's see what Palantir's doing. Palantir's holding quite steady here. Palantir's resistance off this trend line. If it can get through that, we're probably heading to a new all-time high. I do not have 220 calls. All right. Just remember, guys, Palantir had that huge earnings spike up here. So often price action likes to retrace those key levels. So it's been up there in that uncharted territory. Seeing some rejection. Roblox. Roblox looks like it's trying to put out a little bit of a base here, guys. So that one's trying to muster up some strength. Weeble's chart still looks exceptionally bullish down here, guys. You know, look at that stunning breakout on Webull. We could see easily 1140 by January 6th. I think Webull is going to want to be one of those stocks that, excuse me, make a massive move into the end of the year or start of the year. So look at SoFi, backing and filling, PayPal, backing and filling. All these crypto stocks had really good days yesterday. We traded the hell out of those crypto names, guys, yesterday. That was some crazy moves that we caught. Intraday on Bitfarms, which it's given up a lot of its gains there. We caught that whole entire move. That was beautiful. Bitcoin basically giving back, you know, about half of its rally from yesterday. Again, guys, I'm not expecting too much volatility this morning. It's probably going to be a lackluster day in the morning session. You know, don't be looking for crazy moves, I think, to happen before Powell. Let's look at the CME watch tool. Let's just take a quick note. So heading into the meeting, 89.9% cut, 10.1% no cut. And then we scroll through the next meeting, January, is basically a 72% hold. And then March, let me just look back at that. March is also majority hold. Okay. All right, guys, let's go split screen mode. We will wait for the market open here. Again, wouldn't be surprised for a lot of chop. Lots of chop. That's what I'm expecting in the morning here. Markets are slightly bearish, though. Slightly bearish. Good morning. Morning, everybody. Hey, guys, I'm not expecting too much movement. Okay. Um, Unless something presents itself, I'm not really looking to jump into any sort of trade today. Up until that 2 o'clock time frame. 2:30, definitely will be trading. If something presents itself intraday, then we'll take it. But again, we're just going to be, I think, chopping around here. Starting the market off with a little bit of a sell. They might dip us, get people bared up, and then pop us back inside this range. So we'll see. We will see. I'd be surprised if they just knife us. 5 minutes till the US market opens. I just gotta go get some more coffee, guys. Better opportunities probably in individual names. Just give me a sec. I'll be right back. Oh yeah, I was muted, sorry. 42.50 on Microsoft, I think might be a decent trade opportunity. Gapping down into a nice fib level gap fill in the daily. So Microsoft might be on watch for a bit of a bounce this morning. That's really the only thing that I'm seeing. And then maybe a short on GE Verona. GE Verona. All right, we've got a couple minutes here, guys. Are we going to get 1,000% banger on a SPY call or put today off of FOMC? I'm really hoping for a big move that we can just make a nice chunk. Boom. But we'll see. We'll see what they have in store for us. It can go either way. They could. All right, so big support level on SPX is the 68.28. That is your 4-hour 20 moving average as well as your prior day low. So that's kind of the level that I see we could maybe bounce off of on SPX. SPY right now gapping down. Everything is going to have an inflated price today, guys. The implied volatility is going to be high because of FOMC. So just keep that in mind. It's not really worth, I think, starting swing positions until literally after FOMC where they crush all that IV. So the whole market's most options contracts today will be expensive across the board. Everything will be. All right. S&P getting a little bit of a bounce off that 4-hour moving average. Take a look at that. SPX bouncing off that 4-hour, guys. Microsoft is flushing into that gap fill that we just discussed. Still lots of red on the screen so far. Airlines are seeing some strength. Nvidia's flat. Yeah, exactly. Plus Oracle and AVGO. I didn't even realize that. Yeah, those are some big names reporting, especially AVGO. All right, Microsoft did hit that long level, guys. 482.50. It's piercing it again. Thinking about taking. All right, I like Microsoft down here below 482, guys. I'm going to try to stab it on the long side. All right, I'm long 481.77, half position, guys. 481.77, half position. Microsoft. Just common shares for myself. 481.77. It's risky. 481.77, I'm long MSFT. A nice pierce through that gap fill, guys. Really, really good pierce. Nice bounce. Come on. Come on, Microsoft. All right, guys, I'm going to look for a trim above 483. Nvidia is still doing well. Come on, Microsoft. And I would add to this position one more time around 480 Pierce. So 479.90. Microsoft is still dripping. Holy, they're really, really tanking it. Down 2.34%. Mr. Softy's getting annihilated right now. Really hurting the market. Nike's having a good day. Micron strong, Baba's strong, UPS strong, Lululemon's green, Starbucks, Chipotle, GIS, Nat Gas, they're all green. Netflix is trying to hold but slightly negative. Nvidia's getting a nice pop. S&P is still super weak. All right, Carvana. What is Carvana doing today? New high. Wow, CVNA, new high. That's tempting to try to short here. Hmm. Carvana looks interesting for a short here, guys. Nasty price action in Microsoft today. Really, really dirty. Microsoft is still heavy down here. Carvana squeezing. It's absolute squeezer on Carvana. Semiconductors are going through some distribution. Palantir having a good day. WBD strong. iRobot up 20%. Damn, that thing's a beast. iRobot. Again, I'd add to my Microsoft at 479.90-ish. So 480 Pierce, I would double up my position. I'm just in common shares. All right, Nvidia's getting hammered now. SPY's making new lows here. Got to lower that. SPY is falling. Microsoft guys, all right, I just added 479.60. 479.60 took a fill. They are melting your S&P here. Wow. Absolutely melting it. They are melting this. Wouldn't be surprised if they try to take SPY back to gap. Microsoft still heavy here. Chewy having a good day. Wow, Chewy. Big push up in the S&P, guys. Big push up. Microsoft is still lagging down here. Microsoft is still lagging immensely. Microsoft gets a bounce, we'll see the market push pretty hard here, selling off really sharply. Carvana still strong. Netflix struggling here. Apple's just holding slightly green. Bitcoin looking bearish. Nvidia seeing some selling. SPY I still think can retest its gap fill. We're still seeing Microsoft pretty heavy down here. We'll see if Microsoft bounce is going to really help the S&P and Qs. Carvana seeing a little bit of selling at the highs now. Warner Brothers still strong. Nuclear stocks, quantum stocks getting sold into today. Banks are mixed. How's JP Morgan doing today? Let me take a peek. JP Morgan. Yeah, that's still near the lows. Trying to find a little bit of support, but still near the lows. If they take Microsoft green here, I mean, that would be a pretty big move. Back up. I still holding some structure, guys. Trying to bounce and swept that liquidity down there. Got people to pile in on the shorts and then they whip it back up. Not surprising. JP Morgan trying. Again, for a lotto, I think Microsoft 487.50 calls for a lotto are an interesting thing. Again, just be careful. I don't know how big of a move we're going to get today. They might just chop us here. My average on Microsoft 480.65, 480.65. Big push up here. Come on, Mr. Softy. All right, so Microsoft are now green. Let's see it push some more. Come on, Mr. Softy. Keep going. Keep going. Again, Microsoft, if this wants to push up, it could really lift the markets. Netflix still selling, Intel's getting clobbered, Palantir having a day and a half, Amazon strong. Wow. iRobot up 33% now. It's crazy. Tesla having a good day. S&P went positive there, filled the gap. Now we could chop. We'll see. We will see what happens. Let's look at this SPX chart on the larger time frame. Hourly chart backtesting the point of control, what we lost yesterday, bouncing still off of that key 4-hour chart moving average. We'll certainly see what happens here. Microsoft still has some top wick distribution, some slight rejection. Come on, Mr. Softy. Build yourself higher here. Nvidia's still trying to push. Your S&P right now is below, your SPX is below your 7-day moving average. That's where we could maybe want to push to, guys. SPX 7 days at 68.47. All right, we're getting a nice push on Microsoft again. Rip it, Microsoft, rip it. And the market's favoring upside, especially with Microsoft trying to get a little bit of a push here. That can go, imagine Microsoft goes green today. It's a long shot, but just imagine that. You've knifed through that gap, which is pretty crazy, that gap fill. 382 fib level, you came all the way down to a 50% retrace zone. Pretty impressive for sure. Microsoft 7-day moving average at 485.10. 485.10, guys. Look at SPY ripping through its opening range here. Let me just make sure. Yep, ripping through its opening range on SPY. Market's extremely bullish here, guys. Go, Microsoft, go. Come on. Bitcoin's still looking heavy, Netflix heavy, Nvidia got some topic. Apple's starting to get some nice buy side pressure. Apple's really ripping now. Nice bounce off the 277 level for Apple. Your S&P 500 is still trying to push here a little bit. Nike still strong. Western Union strong. Baba having a day. UPS, Lulu, Constellations, Google's green now. Meta's still lagging a little bit, down 0.9%. That's okay. Come on, Microsoft, push it, rip it. I think where they want to maybe take S&P guys is back to this 10-minute EMA, 684-ish. Daily chart. We'll see, but it does look like they want to push us higher here. Again, my average on Microsoft 480, 65, 100 shares, just commons, long. Chart resistance on SPY. That was that 1-minute EMA that kept rejecting us yesterday, but I doubt we're going to see rejection there again today. Bitcoin really struggling here, guys. BTC coming in hard. Rocket Labs is green. Apple's still ripping. Apple is ripping. Top wick distribution in the S&P. Some sell side. Apple so strong. BTC falling. Your dollar's softening a bit, guys. Let's see if they defend SPY at this opening range high. I think if they do, then they'll push us back to 684. But SPY back to the dark side. Negative again on the tape. Palantir got faded. Tesla's now negative. Bitcoin's dropping like a rock right now. Mm-hmm. Palantir is getting sold off. What I've observed here, guys, intraday is the stocks that are strong off the open are getting sold. I think GE Verona is probably going to come in at some point today. Carvana looks a little bit heavier. And then some of the stocks that were weak are getting a little bit of a buy program off the lows. I still think Microsoft can push here, but it's taking its sweet old time. Definitely taking its sweet time. Nvidia are getting some sell side pressure right now. It's still actually holding up okay, guys. You're still into that little bit of a 1 minute chart resistance where we keep getting rejected off intraday. Yesterday we saw that level keep us in check. We'll see if they want to pop us here a little bit more. Apple has some top wicks. Bitcoin catching a little bit of a buy program. Looks like a liquidity sweep through pre-market low. Lots of red across your high beta names. Your quantum, your nuclear. Banks are slightly mixed on the session today. JP Morgan's flat. Google's flat. Meta down. Tesla's now negative. Microsoft getting sold into yet again. BTC seeing more sell side pressure. WBD coming in. Soft still lagging. Bitcoin trying to defend its pre-market low, but also very heavy, down 1%. Crude oil's down, nat gas still green. S&P still seeing some sell side. IWM's basically slightly green. SPY and Qs are actually underperforming due to Microsoft here. Still coming in a little bit. Nvidia down 0.4. Tesla, Meta, Google still red. Apple's. Amazon still acting very, very well. Come on, Microsoft. Get your big butt up there. Give us a higher low here. And rip. Just want to calculate something. Again, there is a bit of a lotto on Microsoft, I think. 487.50 calls are not bad. It's just the premiums are so high. Let me just calculate something here. That's why I decided to go with common shares, because the premiums are juiced across the board, guys, today. Not saying they can't work out, but let's see, 487.50. Again, imagine they try to take Microsoft green, guys. That would be crazy. I don't know where SPY would be, but and Qs, but imagine they took Microsoft green today. That would be insane. WD calls from 5 cents to 41 cents. Nice job there, Peter. Wonderful. Amazing. Drinks are on Peter tonight. Bang. Come on, softy. Get your big butt up there. At SPX here. Definitely some resistance on your hourly chart. Markets are still trying to bounce here. At minimum, I think Microsoft can retest this upsloping trend line. At minimum today. Come on, Microsoft. Don't be dirty. So SPY is consolidating right on that opening range high. That's a short-term bullish signal. I think Apple's seeing some selling. Rocket Labs, guys, a stunning day for RKLB again. Up 1.5%, pushing for pretty much a new high of day. I like it a lot. We are obviously long Rocket Labs. In the investing group, our position is working out quite nicely. Rocket Labs is now coming into the 50-day moving average. Crazy. Crazy push on RKLB. I like it a lot. Rocket Labs is squeezing up over 18% on our common shares, 19%. Wow, look at RKLB, guys. Beautiful. Beautiful. Squeeze it, baby. Squeeze it. Our common shares are printing, guys. Look at that. Holy moly, we're knifing through the 50-day moving average. Holy. What a position there. That is amazing. All right, guys, I'm trimming half my Rocket Labs here. Oh, look at that reversal. Locked in about 19.6% gain on our Rocket Labs. 19.6% on our Rocket Labs. Yeah, I like Microsoft. I like the call options on Microsoft. I think that there's a good risk to reward down here. 487.50s are a long shot, but it could happen. It could happen. You know, if you start to see some rotation out of this, it could definitely happen. It's not out of the realm of probabilities. That's for sure. I like it a lot. Well, you got weeklies. You got December 12th, right? No 0DT on Microsoft. It's December 12th, the weeklies. So you got till the end of the week. Good morning, dang dang. Hello, hello. S&P's pushing here, guys. S&P is pushing. Carvana's still strong. S&P's getting through and consolidating around that opening range high. Nasty little sell there on MSFT. Doing a lot of backing and filling and chop and slop down here. Lots of chop, lots of slop. Netflix getting pummeled. Yeah, so you got more time than you thought, which is always helpful for those options contract. But Microsoft down here, if it were to hit 487.50, those would go up, probably between 175 to 200%. If you filled the gap today, 492, you'd probably be up about, I don't know, over 300, 350%, somewhere around there. But it's a long shot, remember that. Microsoft is still somewhat bearish down here. Meta's still struggling, down 1%. Netflix down 1.5%. JP Morgan's green. Microsoft still down 2.4%. Warner Brothers up 3.31%. Yeah, drinks on you then for sure. Carvana's still up 1.2%. But Microsoft's not out of the woodwork yet. It needs to firm up here. It's still in a little bit of a bearish intraday formation here. You don't want to see it lose this zone. I'm still holding down slightly on my commons. SMR getting slapped. That's down 6%. Rigetti down 4.7%. Damn, that Rocket Labs. I love that stock. If you haven't done a deep dive into Rocket Labs, I definitely would encourage you to do so. What else we got? West WDC acting well. Micron's green. Bravo's still strong. UPS having a really good day. UPS is up 2.1. Oh, we got crude oil inventories in 21 minutes too, guys. Just keep that in mind. Wow, UPS, guys. Look at UPS go. Look at this beautiful move on UPS, guys. I love it. UPS is going to break out here. Next stop is going to be 108. It could even hit gap fill today, 101.44. UPS is having a day. Lululemon's still consolidating. Let's look at Constellation Brands. STZ, hold my beer. Get me my Corona. Maybe that's why CGC is also going to pump up here and break out soon-ish. We will see that. Hmm. Come on, Microsoft, you're so heavy. It's trying down here. It just does not want to give us that big push. If we can clear this high pivot, 481.70, Microsoft should squeeze to at least 483.50-ish. Come on, Microsoft. I feel like they're keeping it pinned down here. Wow, UPS, guys, is a monster right now. An absolute beast. Beast mode. Booyah, having a good day. Open door, seeing some distribution. 1.5 billion call wall at 700 per cheddar flow. Thank you. 1.5 billion call wall at 700 on SPY. 700. Oh my gosh. That's crazy high. That's crazy high. I had to double take that. 700. Yeah, that's super high. Come on, Microsoft. Get your big butt up there. Squeeze us. Nike having a good day. Acting very well. Come on, MSFT. Squeeze it. Squeeze it. Ouster is consolidating quite nicely, looking like it's building a bull flag pattern off the 7-day moving average. OUST is looking pretty solid. Here comes Microsoft. Here comes Microsoft. Come on, Rocket Labs. Wow, Rocket Labs, guys. Look at the squeeze on RKLB. Now into a 50% retrace fib zone. That is stunning. Absolutely stunning on Rocket Labs, guys. It's a pleasure doing business here. I love Rocket Labs. I'm not going to sell the rest of my position. Trimmed half. Stops are in place. Trade is risk free, and now we let it ride to the high side. I think we could see a new 52-week high. I think Rocket Labs in 2026 will see 85 bucks. What else we got? ENVX, another bull flag. Nice catch up. Come on, MSFT, get your big butt up there. You know you want to. Steve. It's trying to firm up as well. Trying to at least. Come on, Microsoft. Get your big butt up there. MSFT. Google, Apple still holding steady. Tesla back to the green side. Nvidia still down. Microsoft still underperforming, down 2.31. Amazon still outperforming, up 1.58. Come on, MSFT. 12 and a half minutes left in the hourly candle. I'd love to see it get a big push here in the last 12 minutes to maybe create a bit of a bottoming tail in the hourly chart. We'll see. It's got a lot of work to do that, but if Microsoft were to form a bit of a bottoming tail on the hourly candle, it would have to push to at least 482.50. It would have to push to 482.50, preferably 483 to form a bit of an hourly bottoming tail, which it has a tendency to do that in the last 10-minute candle. It could get a push. It's trying to firm up here. Come on, MSFT, break out. Break out here. Carvana going for another new high of day, CVNA. Yeah, I watched the FIFA World Cup. I keep tabs on everything. Absolutely. And then we got Champions League games today as well. So today's an action-packed day. At least my team. We had Champions League yesterday. We got Champions League today. I'm watching Arsenal. I'll play it in the background while I trade Fed. All right, markets are still just chopping here. Microsoft not really doing too much here. Still chopping in a bit of a bearish range intraday. Really, really struggling here. Looks trying to find a bit of a bottom here. Let's look at the Qs. Qs are still negative on the session. Yep, half the FOMC day. It's going to be an interesting tape, guys. It'll be very interesting to see what happens here. Yep, GEV broke out of the bull flag you were talking about, Kevin. Yep, nice call out. Very strong news, upward revision of its guidance. So GEV acting very, very well. IWM still lagging just a touch here. Let's look at IGV. Still weak price action down here from Microsoft. Still hasn't given us that bump up in price that I'm looking for. Come on, Microsoft. What's the volume down here like? Yeah, volume's lightening up here. See if they want to take the Qs green, guys. SPY went green, IWM went green, QQQ still down 0.21%, $1.28. Yeah, Carvana's a beast. That's why I stayed away from it. I'm getting tempted to short it. I'm getting tempted to short Carvana, but it's too beast mode here. I mean, I might take a short into the end of the day, understanding that it could still push to 480, maybe even 500 if a blow off top move happens. Um, but it's getting close. You're waiting till 500? Yeah, good to know. Good to know. It's getting close though. I want it to the higher it goes, the more money I can make on the short side, so I don't mind them squeezing it. That's for sure. Right now I want Microsoft to get its big butt up here, but it's really, really struggling. Yeah, Rocket Lab's still having a day and a half. I like it a lot. Oh, Microsoft, go! Get your big butt up there. Rip it. Wow, we've already been open for pretty much an hour, close to an hour already. Again, guys, I don't know how much more the S&P is going to move. They might just keep us pinned here, chop us ahead of FOMC, so just understand that. I feel like they want to still bump up Microsoft, though. Come on. Come on, Mr. Softy. Get your big butt up there. Google, Apple still green. Tesla's doing well. Nvidia down 0.45, Meta down 0.78. Google still looks pretty strong intraday. Amazon still looks strong intraday. Come on, take the Qs green. Pump up Microsoft. Take the Qs back to gap fill. That would put everyone on even kill. You're crazy. Sentinel-1, ticker S. Let's take a peek. A little bit lower, it looks like it needs to go. If it sweeps this pivot low, it gets a little bit interesting. So at least it needs to sweep this 14 handle. Just a quick observation. They're still shaking the Microsoft tree. Not good price action in Mr. Microsoft. Come on, I wanted to get micro hard. Come on, micro. Jeez, why are you selling more now? Coin's still struggling, guys. It's trying to crack through its opening range low. Nvidia's struggling here. That's selling off from 183.80-ish. QQQ still seeing some distribution. Microsoft trying to get a little stick save on your 1 minute chart. Come on, MSFT, push it. So we're going to do a little bit of a poll here. FOMC dump or pump? See what happens. Dump, pump, dump. Microsoft, you can push here. I mean, it's a big gap down. You should be able to gain some strength here. We're seeing SPY retest its opening range high, guys. QQQ still trying to firm up. Nvidia trying to find some support. Seeing Microsoft selling off yet again. Oh yeah, crude oil inventories just came out, guys. WTI crude, let's see what's going on. Crude oil inventories still pretty weak down here. We'll watch it on the other screen. WTI. Microsoft looking like it wants to test the lows and sweep the lows. Crazy. Nasty price action on Microsoft. It's now down 2.5%. Looking pretty heavy here. SPY's rolling. Rolling heavy. It's still vulnerable. Nvidia getting wrecked here, guys. Microsoft under a lot of pressure. Nvidia retesting its prior day low. Microsoft looking like it's going to sweep its lows here. So Microsoft is still pretty heavy down here. Microsoft still getting hammered, guys, at double bottom. Looks like it wants new lows, though. Maybe you do a little bit of a liquidity sweep. SoFi looks pretty strong, guys. SOFI looks like it's holding some positive structure here. Forming a bit of a flag on your 5-10 minute chart. So SoFi, even during the sell-off, is holding some positive structure. We will see. S&P right back down to the lows. Still heavy here, selling off sharply, forcing the QQQ downtown. Qs are breaking their opening range low. Uh-oh. SoFi is holding some positive structure here. Not a bad intraday setup. Thinking about taking some 2750 lottos. I'm going to watch that throughout the course of the day. Premiums are still juiced, but I'll watch it. Still like Microsoft down here. Double bottom, a little bit of a liquidity sweep. Still holding my commons. Look at this SoFi chart, guys. Intraday, it's positively strong, building a nice 5-minute bull flag pattern. I'm just looking at that gap fill as a magnet. During that whole S&P sell-off, SoFi basically held structure. So maybe there's a bit of a trade. Maybe it's going to rip here intraday to the gap. It's looking pretty positive, guys. It's looking pretty positive. I did take some 2750 lottos end of week, just as a heads up. 2750 calls, that is. Still super heavy. Netflix heavy. Qs are finding some support. Qs are still so weak. Nvidia is drilling, guys. Now down 1.13% and falling sharply to the downside. NVDA not looking too healthy right now on Nvidia. I mean, Nvidia could flush down to 181-ish if this starts to. You're hitting some 30-minute chart support, so there is a level here. But SoFi looks like it wants to break here, guys. Keep SoFi. Keep SoFi. If it can break out here, we could have a squeeze to that gap fill. Put that on your radar. This is setting up like crypto yesterday. It's looking pretty decent right now. Microsoft still sucking down here. SoFi breaking out, guys. SoFi is breaking out. Go SoFi. Breaking a bull flag here, guys. This one could squeeze here. My calls are already printing. I'm already pushing up 15, 20% here on my calls. Come on, SoFi. Rip it. Rip it. New high of day. So SoFi is outperforming the market. It's giving us higher highs, higher lows. Very strong for now. See if we can squeeze this bad boy. Nvidia is catching a bit of a bid here. Qs are getting a really fat candle bid. SPY ripping. Big ripper on SPY. Big rip. Potential W formation on SPY. You've got a potential higher low. We really need to see Microsoft push here to get SPY out of this little bit of a range. Qs are still heavy here, guys. Nvidia breaking down. Microsoft still lagging at the lows. SoFi getting rejected. Market getting slapped right back down. Seems like they're going to keep us chopping in this opening range high and opening range low range. May not break out. Honda still strong. WBD strong. What's it got? Western Union having a good day. Micron still strong. Baba's still up a couple percent. Lulu at UPS still good. BTC trying to put in a little bit of a bottom here. Base. Yeah, it's a monster. IRBT, Sarper is saying his $5 target. Done. Yep. Crazy. It looks like it wants that gap fill at 560-ish. Don't know if it'll happen today, but it could. It's looking like maybe a 3-bar surge. Healthcare stocks are catching a little bit of a bid here off of the lows, guys. How's Novo Nordisk doing? Novo Nordisk, strong session. Wow. QQQ, new lows, guys, melting to the downside. Your NASDAQ is getting slapped. Qs are getting slapped. Nvidia and Microsoft are wrecking this market today. They are sweeping some lower boundary liquidity today. Nastiness on these names. That guy's got a phone call. Microsoft might be ready to break out here, guys. Showed during that S&P pullback, it showed a little bit of relative strength. Come on, Microsoft. Start to squeeze and break out here. Potentially a little bit of an inverse head and shoulders. That could squeeze it to about 483 if that upside is hit. This one's been a patient trade, guys. It's been chopping around, but looking a little bit more constructive. We just needed to give us a nice push through this EMA. You can see the chop on this EMA, and now it's trying to get through it again. So it's looking a little bit better. Looking a little bit better. ETH big spike. Yeah, Bitcoin, ETH are still carving out a bottom, but definitely a big spike on Ethereum. Again, you got small caps acting very well. IWM's actually curling down right now, guys. The Russell's coming in. See the inverse move. So maybe some of this liquidity is piling into Microsoft as a bit more of a safe haven. But Microsoft, if it can take out this high here, it's going to squeeze here. So you might see Microsoft as more of a safe haven play if it can sweep those highs. It is trying to firm up quite nicely here. But we've got an hour and a half till FOMC, so I'd love to make some money on this Microsoft trade before we head into FOMC. We are green on the common shares. I know some of you are in options. I've been watching the chain on the options and well, yeah, nice. JP just put all of the flow on Microsoft. Huge amount of calls. Wow. Nice. Let me just look at that again. What do we see? 490s. Where's the most premium? Premium 509,000 at the 480s, which we're into. 490s, 32K there. A little bit of put premium there. Microsoft squeezing. I like it. I like it a lot. Microsoft looks strong here, guys. Strong. $500 call wall. Put walls at 475. Thank you, JP. Much appreciated. Let's go, Microsoft. Rip it. Squeeze, squeeze, squeeze. MSFT. You might see QQQ take a little bit of leadership here, guys. Lots of volume sitting on the 490 Microsoft calls. 11,900. Call street premium 69K. But more premium sitting at the 485s. 508,000. Plus another 397,000. So yeah, 485s. Lots of volume there. Hmm. Oh shit, I gotta go with my things here. So they are squeezing Microsoft. I like that a lot. Rip it. Almost forgot about my eggs on the stove. I was getting intrigued with Microsoft's price action. But Microsoft is now ripping. Push it. Rip it, rip it, rip it, rip it, rip it. Yeah, BTC is indecisive for sure. Yeah, don't forget about the eggs. I know. I got them now. Nvidia's trying to firm up as well. Come on, Mr. Softy. Keep going. All right, guys, I'm about to trim half of my Microsoft. I'm about to trim half of my Microsoft. All right, just trim there, guys. Stop is at break even. Boom. Nice gain on Microsoft, guys. Yeah, Microsoft does want to go higher, I think, but again, I'm just protecting some profits on the commons. Nice $1.69. Everyone should have been able to catch that. I even got a shitty entry on that, but anyone still riding Microsoft, it should go higher, but I'm just locking in a little bit of profits here. Just because it's had a nice breakout move. Nice gain. Pleasure doing business with you all. Let's see what the runners can now print for us. Trade is risk-free going into FOMC. If you want to hold it for the FOMC, just keep a stop loss. I'm probably going to hold them into FOMC just because, again, common shares, not really too much risk. We've taken profits and we'll see what happens now. Just give me a sec, guys. I don't know how much is left in the tank for this market until Fed, guys. Again, we'll see. So I'm going to take a little bit of a lunch break here, just do some intraday scans, kind of set up what my strategy is going into Fed. Got a couple ideas already what I'm going to be likely doing. If you're trading FOMC with short-dated calls or puts, just size it for 0, because if you're wrong, that's exactly what likely they're going to be. going to with the implied volatility IV right now in the market. Premium is high, IV's high. You typically want to be buying options contracts when the IV is low, not when it's high, because as soon as that IV vol crush comes in, stocks will get, or contracts will get absolutely wrecked. I'm gonna go outside and take care of the snow. Got so much snow here. Gotta go do the snow blowing. Maybe I'll do that before Fed. Get some fresh air, clear some snow. It's probably a good plan. Market looks a little heavier. No? What's the question mark for? Oh. 1 billion price target on Bitcoin. 1 billion. Man, Rocket Labs is just one big beast. Crazy. What a day for Rocket Labs, eh? I love that stock. I'll be right back. Who's squeezing this market higher? Who's squeezing the market? Damn. Still seeing this EMA is still just a battleground, guys, for the markets. I mean, but market's not looking bad here. S&P, you still have the Qs negative, but if Microsoft and the Qs can push a little bit more, S&P is going to squeeze. You know, next resistance is at 684.38-ish, and then 685. But I'd be shocked if we break out of this range ahead of FOMC. But stranger things have happened. All right, I'll be right back, guys. I had to walk away, but the market started squeezing. Holy moly. Holy moly. S&P ripping. Amazon ripping. Apple ripping. Google flat. Meta still down. Tesla slightly green. Microsoft not participating. Nvidia. Nvidia ripping, guys. NVDA starting to shake and bake here. Wow. They might want to pop the Qs green here, guys. They might want to pop the Qs green here. VIX getting slapped. Dollar getting slapped. Natural gas ripping. The pop is to dump. It's looking pretty strong. You got a bullish formation that's triggering here on your S&P, guys. This is a bullish formation. Again, I wasn't expecting much of a pop ahead of the big rate change, but it looks like they are squeezing it here. Wow, and you might be right. They could easily be trapping in more long liquidity before a dump. There's always that case. I think if you start to get back under that 10-minute EMA, so 683.71, then you probably can short it back down. But we are looking strong right now. Nvidia is retesting prior day low, so there's some resistance there for sure. Yeah, I'm still in SoFi. I'm gonna hold that as a bit of a lotto. 10 minutes till showtime, where we get the first move. Let me just grab some water. All right, guys, so there's going to be two moves. A little one off the rate announcement, and so a little one off the first announcement, and then the bigger one off of Powell. So 2 o'clock we get the rate decision. They'll update the dot plot. You'll get a small one. That one is kind of good to play both ways. If you set some limit orders on the downside, you might get a quick fill off of a big wick down or a big wick up. So I usually like to have some resting buy orders on both sides of the trade. So if you want a short SPY and go long SPY, you just have a limit order down below. And then be sure to quickly cancel both depending on which one gets filled, and then quickly exit, take your profits. So that's the 2 p.m. setup. You could get a quick spike, which is usually a quick shortable spike. Could get a quick drop, which gets bought up. That's what I see here. SoFi still made a really, really nice move to the upside. Ending higher and higher. Microsoft got absolutely pummeled again. The dollar getting slapped. But the bigger move is at 2:30. Powell, guys. Papa Powell. So I think there's two targets on the S&P. The big downside target I think is around 678. On SPY, the big upside target is 686. And we could even overshoot those, guys, on this day today. But I'd love to see a bit of a dip down. Let me just see what the chain is looking like for SPY. Always want to put up this fib retrace. Let's just throw up a fib level. Lab still squeezing like a boss. I think what I'm going to do is have a buy order on SPY. I think I'm going to go into 682 0DT calls. Right now they're 261, but I think I'm going to have an order near $2 in case we get a big spike down. right ahead of 2 o'clock, I'll put I think a $2 limit order on SPY for a quick bounce. That's what I'm thinking. All right, we are selling off a little bit into it. Again, the bigger move, the bigger IV crush comes at 2:30, guys, when Powell walks out. So we'll see. So far, we've got 8 votes in the group. 88% say pump, 12% say dump. Cool. This is a massive level on SPX. All right, SPY still melting here. A little bit of de-risking ahead of the Fed decision. So again, guys, what usually happens on the Fed decision, you get either a drop or a pop, and then it settles out and trades in the same range. So this is kind of the first tiny move, fake move. Again, I'm having a resting buy order, 682, 0 DTEs at $2. I'm going to punch it in. If I see it drop. And on the put side, I would think 684s, 684 puts, but the real bigger move happens on Powell. That's what I'm excited for. Oh, Netflix just keeps drilling. Jeez. Netflix, you dog. One minute till showtime. Twenty seconds. Here we go, guys. Brace for impact. Small move, and then the big move is a little later. If we drop, I'm looking to buy that dip. Quick spike. Usually that gets faded somewhat. 25 basis point cut. Guys, I'm taking half my profits on SoFi, half my profits on SoFi. Big spike here. Nice spike up. This is a shortable level off of 685. Keep your stops tight. Boom. Nice profits on SoFi, guys. Really strong profits. Boom. That 685 level worked like a charm. I'm all out, but I'm all out of my SoFi as well, guys. All out of SoFi. Now we should settle back in the range. That was a quick scalp. All right, SoFi. Profits locked on SoFi. Nice profits on SoFi. Damn, that was a nice short, guys. 685 worked well. Damn, that was quick. I got filled at $1.85 on 685 SPY puts and sold at 229. That was the small move. Nice 2 for 2. Look at SoFi coming in too, guys. Hopefully you're all able to bank on SoFi. That was a good little pop, selling pretty much right at the high of that candle as we bumped into prior day high. Beautiful move, guys. Now we're going to settle down in the same, probably the same range. I don't see us making a move until Powell comes out. Thank you, thank you. Yeah, SPY puts worked out well there too. Beautiful. They are eating up that liquidity. Holy moly, look at that reversal, guys. That's what I said. You can buy the first dip or short the first pop. Usually you settle back in the range, so that's a trade and a half right there, guys. That's how you play both sides. Because usually it gets a pullback. Now Powell will be definitely the bigger move. You know, this candle, what I like to do now, usually what we can do is make 3 times the move of the initial candle. So imagine we make 3 times the move on this candle to the upside or to the downside. It could be either way. That would put SPY at 690. Usually Powell sees 3 times the move. Or we see 675. That would be insane. Holy moly. That'd be insane, guys. So your dollar imploded. Bitcoin really had an initial spike and then got sold into. But don't chase the market here, guys. I would not chase it here, personally speaking. Did anybody scalp that? I certainly did. Fucking SPY. Great trade. Great trade on SoFi and SPY there. Alright, let's just fandangle some stuff here. Orders. 49. Because now we time for the bigger move. That was a little bit of a teaser. So again, if we hit 3 times the move of that candle, it's a long shot, but I'm not saying that that's going to happen, but that's what can happen. That would be roughly what? From here, another 5 over $5 move on SPY to the upside, or even bigger to the downside. It's tempting to take puts again, guys. Very, very tempting, but I'm just going to hold off and personally wait. SoFi, if you didn't get an exit, SoFi is right back to the highs, guys. SoFi loving life right now. 2-year yield is collapsing. Look at SoFi ripping into that gap. 27.48, new high of day. What a ripper. What a ripper. SPY is absolutely pressing here. I'm tempted to short it again, guys. Holy moly. I am going to short it off of this 686 area. If we pierce there, I'll take 686 puts. Just going to keep it in the money. Come on, go a little bit higher. A little bit higher. What a ripper. This could be a bit of a trap here, guys. But wow. Tempted to short this, man. In 690s. Dom's in 690s. I'm thinking about taking some Lotto 678 puts. I think that this might be a bit of a trap. I will play PAL Live, guys. I will play PAL Live. Yeah, they cut. They cut by 25 bips. Yields imploding, dollar imploding. They cut. 25 bips. I don't even know what the consensus was, to be honest. I was too busy trading the reaction candle. Markets are pushing here. Nice push on your SPX. Really good push. All right, I got the Fed queued up here in the background. That hitting that deviation band, guys, that's a short level on your SPY. That's a little bit of a near-term short. What happened there? I don't even know what I just placed. What did I place? Oh, that tripped me out. I thought I bought something. My thing was just delayed. It's crazy. No, there's an overwhelming majority for no cut in January. No cut January so far. Yeah, everyone was expecting this rate cut. This was priced in. No, they're wrong. Fed watch tool. Look, 71% chance. That's why you watch the CME. I watch this every day. The next rate cut, like I said, I posted early this morning in the group. We'll leave it. I won't get into too much of the macro, but no rate cut in January is priced in. Majority consensus is a hold. We're still lagging on the inflation side of the data. Trump can't do shit. He thinks he can impact the Federal Reserve. He can't do anything with them. They're too powerful. Bankers are another level. There's government and then there's bankers. The Federal Reserve is on some next level. They got their own laws. I don't think Trump can even touch them. Sure, he can appoint, Hassett or someone like that for nomination, but that's about it. He really can't do much of anything else. Dom said he's saying BTC spike time. We'll see. We will see. 17 minutes. Again, 17 minutes till Papa Powell comes out. It should be exciting. Parvon is another interesting one off of a spike up. It could be a short, guys. CVNA. Yeah, Trump's a real estate man. He leverages credit to make his wealth. Smart guy. Let's look at the Russell here. How's the Russell doing? Yeah, Russell, new high, guys. New all-time high on the Russell. That's pretty crazy, eh? I think that the market could sell, to be honest, guys. I think that Powell is going to have to come out here and he's going to have to raise his concerns about us not having the full picture of inflation. That's the big thing, is that we still don't have November, December data for inflation. We're delayed by a big margin. So again, guys, I'm looking at shorting. If we pop, I'm looking at shorting. If we drop, you'll usually get a bounce. They say the first move is the wrong move. Yeah, the Fed's lost a lot of credibility. I agree with that for sure. So again, you pop, same sort of thing. You can have, it's dangerous on this move to have resting orders because the move can be very much bigger than this candle. We can get a much bigger move than this little interest rate decision candle. Usually Powell's candle is powerful. So, but usually shorting the first pop and buying the first dip works out quite well. I would be a buyer if SPY dipped into 680. I think you'd get a bounce there. If SPY popped into, let me just draw the previous all-time high here. IWM is at the highs, so maybe SPY wants to make new highs as well. Just isolate this level. And there is a potential short of a level off this, a pierce of this 688 level. $13 till showtime. Nvidia looking solid, trying to push higher. $12 till Powell. 12 minutes. So if we spike up, guys, I'm going to take some Lotto's 678 puts. If we drop down to this OR low area or pierce it, I'm going to take, I'm looking at 682 calls. Remember, we got that dark pool print sitting around, what is it, 682.29. Dark pool on SPY. What color tie? Purple? Gray? We will see what happens. So usually the first move is the wrong move, guys. 7 minutes till showtime. Yeah. Lotto. Hey, at least if you do one, you have some exposure. If it goes to zero or you lose, it's not a big deal. If you win, amazing. You got to partake in the shenanigans. So I've got a couple different put orders, guys, layered at the highs here. If we spike, and then I'm going to be ready for calls if we dip. That's how I'm playing it. I've got some 678 lottos just resting at the highs here. If we spike, and 683 call, I'm going to be ready to buy the dip. I'm thinking around 160, 170 if we dip, but there's going to be a lot of, whichever way, there's going to be a huge vol crush. Maybe even 150 now on SPY calls. It's going to be a huge vol crush. There's going to be a big vol crush in the market. Yeah, it's fun to have skin in the game for sure. Absolutely. I got it queued up in the background. I will place, I will play the meeting in the background. Just make sure I got the right speakers. So there will be a huge vol crush momentarily, 4 minutes, because the IV, guys, is stacked across all of the chain right now, whether it's the indices, individual stocks, there's going to be a huge volatility crush. Whichever contracts, whichever way we go first, there's going to be a huge vol crush, right? So if they spike it, puts will have a huge decline, no matter what, pretty precipitously. Same thing if they drop it, calls will just get absolutely ripped on. But usually shorting the first drop, first pop works out quite well. I want to see us at least clear 687.48 to short. But I got some resting orders up there at Lotto. Size it for loss if you're playing. Size it for loss if you're playing. This is pretty much a gamble. These events are designed for really both traders to lose, as algorithms can execute a lot faster than our mouse and fingertips. So if you're playing, good luck. 3 minutes till showtime. I'll play the commentary in the background. Look at that whole move, guys, getting wrecked. That whole move is coming in sharp. All right, we'll cue up this background music. We got the FOMC playing live, 24,000 people tuned in on YouTube. Whoever's calling me, you do not know that there is an FOMC event right now? Like, I'm gonna add it to my phone now? Yeah, right. Get out of here. Get out of here. See what happens here. We got the daily chart up, we got the 10-minute chart. Powell is walking out. See what tie he's wearing. Dip target for lotto calls is this the first dip, 680. But it's going to be quick. Don't stay in for too long. All right, he's delayed. What's happening? Purple tie.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although important federal government data for the past couple of months have yet to be released, available public and private sector data suggests that the outlook for employment and inflation has not changed as much since our meeting in October. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals, in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a 0.25 percentage point. As a separate matter, we also decided to initiate purchases of shorter-term Treasury securities solely for the purpose of maintaining an ample supply of reserves over time, thus supporting effective control of our policy rate. I will have more to say about monetary policy and its implementation after briefly reviewing economic developments. Although some key government data have yet to be released, available indicators suggest that economic activity has been expanding at a moderate pace. Consumer spending appears to have remained solid, and business fixed investment has continued to expand. In contrast, activity in the housing sector remains weak. The temporary shutdown of the federal government has likely weighed on economic activity in the current quarter, but these effects should be mostly offset by higher growth next quarter, reflecting the reopening. In our summary of economic projections, the median participant projects that real GDP will rise 1.7% this year and 2.3% next year, somewhat stronger than projected in September. In the labor market, although official employment data for October and November are delayed, available evidence suggests
You'll get
that
volatility in the Q&A.
hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. The official report on the labor market for September, the most recent release, showed that the unemployment rate continued to edge up, reaching 4.4%, and that job gains had slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. In our SEP, the median projection of the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Very little data on inflation have been released since our meeting in October. Total PCE prices rose 2.8% over the 12 months ending in September, and excluding the volatile food and energy categories,
seeing the market pushing up here.
Also rose 2.8%.
New high of day on the S&P 500.
Earlier in the year, as inflation for goods has picked up, reflecting the effects of tariffs. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have declined from their peaks earlier in the year, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation.
I'm short, guys. Lotto, I'm short.
And 2.4% next year, a bit lower than the median projection in September. Thereafter, the median falls to 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 3.5 to 3.75%. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. A reasonable base case is that the effects of tariffs on inflation will be relatively short-lived, effectively a one-time shift in the price level. Our obligation is to make sure that a one-time increase in the price level does not become an ongoing inflation problem. But with downside risks to employment having risen in recent months, the balance of risks has shifted. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. Accordingly, we judged it appropriate at this meeting to lower our policy rate by a quarter percentage point. With today's decision, we have lowered our policy rate 3/4 of a percentage point over our last 3 meetings. This further normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2% once the effects of tariffs have passed through. The adjustments to our policy stance since September bring it within a range of plausible estimates of neutral and leave us well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for
I'm in 681s and 678s, guys. Puts 0 DT.
That the appropriate level of the federal funds rate will be 3.4% at the end of 2026 and 3.1% at the end of 2027, unchanged from September. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. Let me turn now to issues related to the implementation of monetary policy, with the reminder that these issues are separate from and have no implications for the stance of monetary policy. In light of the continued tightening in money market interest rates relative to our administered rates and other indicators of reserve market conditions, the committee judged that reserve balances have declined to ample levels. Accordingly, at today's meeting, the committee decided to initiate purchases of shorter-term Treasury securities, mainly Treasury bills, for the sole purpose of maintaining an ample supply of reserves over time. Such increases in our securities holdings ensure that the federal funds rate remains within its target range and are necessary because the growth of the economy leads to rising demand over time for our liabilities, including currency and reserves. As detailed in a statement released today by the Federal Reserve Bank of New York, reserve management purchases will amount to $40 billion in the first month and may remain elevated for a few months to alleviate expected near-term pressures in money markets. Thereafter, we expect the size of reserve management purchases to decline, though the actual pace will depend on market conditions. In our implementation framework, an ample supply of reserves means that the federal funds rate and other short-term interest rates are primarily controlled by the setting of our administered rates, rather than day-to-day discretionary interventions in money markets. In this regime, standing repurchase agreement, or repo operations, are a critical tool to ensure that the federal funds rate remains within its target range, even on days of elevated pressures in money markets. Consistent with this view, the committee eliminated the aggregate limit on standing repo operations. These operations are intended to support monetary policy implementation and smooth market functioning and should be used when economically sensible. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing our inflation sustainably down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. At the Fed, we will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
All right, this is where we get volatility. Question period.
Thank you. Howard Schneider with Reuters. Just first turning to the statement, just to be clear, we're on the same page here. The insertion of the phrase, considering the extent and timing of additional adjustments, does that indicate that the Fed is now on hold until there's some clearer signal from
crazy price, guys,
inflation or jobs or the evolution of the economy along the baseline outlook?
So, yes, the adjustments since September bring our policy within a broad range of estimates.
Color firming up.
And as we noted in our statement today, we are well positioned to determine the extent and timing of additional adjustments based on the incoming data, the evolving outlook, and the balance of risks. That new language points out that we'll carefully evaluate that incoming data. And also, I would note that having reduced our policy rate by 75 basis points since September and 175 basis points since last September, the Fed funds rate is now within a broad range of estimates of its neutral value, and we are well positioned to wait to see how the economy evolves.
And if I could follow up on the outlook there, it seems
nice
like
decline.
Additional GDP growth coupled with easing inflation and a fairly steady unemployment rate, this seems like a pretty optimistic outlook for next year. What's given rise to that? Is this an early bet on AI? Is there some sense of improving productivity out there? What's driving that?
So a number of things are driving what's happening in the forecast. And I would say if you look broadly at outside forecasts, you do see a pickup in growth in many of those now, too. So
beautiful.
It's partly that consumer spending has held up. It's been resilient. And to another degree, it is that AI spending on data centers and related to AI has been holding up business investment. So overall, the baseline expectation for next year is, at least at the Fed, and I think with outside forecasters too, is a pickup in growth from today's relatively low level of 1.7%. I mentioned that the SEP median is 1.7 for this year growth and 2.3 for next year.
Sold half, guys, over 100% there. 681's covered half, over 100%. Beautiful.
2026 and put it in 2025, so it would really be 1.9.
Amazing.
But overall, yes, for a few reasons, fiscal policy is going to be supportive, and as I mentioned, AI spending will continue. The consumer continues to spend, so it looks like the baseline would be solid growth next year.
Let's go. Yes, let's go.
Thank you, Mr. Chairman, for taking our questions here. You had previously described rate cuts in terms of a risk management framework, and kind of following up on what Howard was asking, is the risk management phase of rate cuts over here, and have you taken out sufficient insurance, I guess, against potential weakness in terms of the data we might get next week when it comes to employment?
So we're going to get a great deal of data between now and the January meeting, and I'm sure we'll talk more about that. And the data that we get are going to factor into our thinking. But yes, we have, if you go back, we held our policy rate at 5.4% for more than a year because inflation was high, very high, and unemployment in the labor market was really solid at that point. So what happened is over last summer of 24, inflation came down, and the labor market began to show real signs of weakness. And so we decided, as our framework tells us to do, that when the risks to the two goals become more equal, you should move from a stance that favors really dealing with one of them, in that case inflation, to a more balanced, more neutral setting. And so
we're going lower.
We did that. We did some cutting, and then we paused for a while to work our way through what was happening in the middle of the year. And then we resumed cuts in September, and we've cut now 3. We've now cut a total of 175 basis points. And as I mentioned, we feel like where we're positioned now we're well positioned to wait and see how the economy evolves from here.
If I could just follow up on the SEP, you have a whole lot of big increase in the growth numbers, but not a big decline in the unemployment numbers. And is that an AI factor in there? What is going on in terms of the dynamic of you get more growth, but you don't get a whole lot of decline in unemployment?
What was the play, guys?
So
Shorting that pop.
The implication is obviously higher productivity. And some of that may be AI. It just also, I think, productivity has just been almost structurally higher for several years now. So if you start thinking of it as 2% per year, you can sustain higher growth without more job creation. Of course, higher productivity is also what enables incomes to rise over long periods of time. So it's basically a good thing. But that's certainly the implication.
Thank you. Colby Smith with the New York Times. Today's decision was clearly very divided. It wasn't just the 2 official dissents against the cut, but there were also soft dissents from 4 others. And I'm just wondering if this reluctance from several people to support recent reductions suggests that there is a much higher bar for cuts in the near term. And what exactly does the committee need to see if things are well positioned right now to support a January reduction?
Sure. So let me just say, as I mentioned, and as I've mentioned here before, the situation is that our 2 goals are a bit in tension, right? So interestingly, everyone around the table at the FOMC agrees that inflation is too high and that we want it to come down, and agrees that the labor market has softened and that there's further risk. Everyone agrees on that. Where the difference is how do you weight those risks, and what does your forecast look like, and where do you, ultimately where do you think the bigger risk is, and it's very unusual to have persistent tension between the 2 parts of the mandate, and when you do, this is what you see, and I think it's actually what you would expect to see, and we do see it. Meanwhile, the discussions we have are as good as any we've had in my 14 years at the Fed. They're very thoughtful, respectful, and you just have people who have strong views, and we come together and we reach a place where we can make a decision. We made a decision today. We had 9 out of 12 supported it, so fairly broad support. But it's not like the normal situation where everyone agrees on the direction and what to do. It's more spread out, and I think that's only inherent in the situation. In terms of what it would take, we all have an outlook in terms of what's going to come, but I think ultimately having cut 75 and the effects of the 75 basis points will only begin to be coming in. As I've said before a couple times, we're well positioned to wait to see how the economy evolves. We'll just have to see. And we will get, as you know, quite a bit of data. I should mention on the data, as long as I'm talking about it, that we're going to need to be careful in assessing, particularly the household survey data. There are very technical reasons about the way data are collected in some of these measures, both in inflation and in labor, in the labor market, so that the data may be distorted and not just sort of more volatile, but distorted, and And that's really because data was not collected in October and half of November. So we're going to get data, but we're going to have to look at it carefully and with a somewhat skeptical eye by the time of the January meeting. Notwithstanding that, we will have a lot of the December data by the time of the January meeting. So we expect to see a lot more, but I'm just saying that what we get for example, CPI or for the household survey, we're going to look at that really carefully and understand that it may be distorted by very technical factors.
And just one more question on dissents. I mean, you talk about it in a very positive way, just given the complicated nature of the situation we're in economically. But is there any point in which those dissents become counterproductive, either to the Fed's communication and the messaging around the policy path forward?
I don't feel that we're at that point at all. I don't. I would say, again, these are good, thoughtful, respectful discussions, and you hear people say, and you hear many outside analysts say the same thing. I could make a case for either side. I mean, I could make that case. It's a close call. We have to make decisions, and we always hope that the data will give us a clear read. But in this situation, you have competing. If you look through the SEP, you'll see that a very large number of participants agree that risks are to the upside for unemployment and to the upside for inflation.
That's bearish.
So what do? You've got one tool. You can't do two things at once. So at what pace do you move? What size moves do you make, and that kind of thing? And what's the timing of them? It's a very challenging situation. I think we're in a good place to, as I mentioned, to wait and see how the economy evolves.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, there's been some discussion recently of the 1990s. In the 1990s, the committee did two discrete sequences of 3 quarter-point cuts, one in 1995-96 and one in 1998. And after both of those, the next move in rates was up, not down. With policy now closer to neutral, is it a foregone conclusion that the next move in rates is down, or should we think of policy risks as genuinely two-sided from here?
So I don't think that a rate hike is anybody's base case at this point, and I'm not hearing that. What you see is some people feel we should stop here and that we're at the right place and just wait. Some people feel like we should cut once or more this year and next year. But when people are writing down their estimates of policy of where it should go, it is either holding here or cutting a little or cutting more than a little. So I don't see the base case as involving that. So of course, a data set of 2, now 3, is not a big data set. But you are right about those 2 3-cut times in the 90s.
If I could follow up, the unemployment rate has been rising very gradually for the better part of 2 years, and indeed the statement today no longer describes the unemployment rate as remaining low. What gives you confidence it won't continue rising in 2026, especially when housing and other rate-sensitive sectors still appear to be feeling restrictive policy from the notwithstanding the 150 basis points in cuts prior to today?
So I think the idea is that with now having cut 75 basis points more now and having policy, I'd call it in a broad range of plausible estimates of neutral, that will be a place which will enable the labor market to stabilize or to only tick up 1 or 2 more tenths, but we won't see, any kind of a sharper downturn, which we haven't seen any evidence of at all. At the same time, policy is still in a place where it's not accommodative, and we feel like we have made progress this year in non-tariff related inflation, and as tariffs come through, as they flow through, that'll show through next year. But as I said, we're well placed to wait and see how that turns out. That is our expectation, but we're going to start to see the data, and it'll tell us whether we were right or not.
Claire.
Claire Jones, Financial Times. A lot of people interpreted your comments at the October meeting that, when there's a foggy situation, we slow down. to mean that, there wouldn't be a cut now, there'd be a cut in January instead. So it'd be good to get a sense of why did the committee decide to move today rather than to move in January instead? Thank you.
Right. So in October, I said that there was no certainty of moving, and that was indeed correct. I said it's possible you could think about it that way, but I was careful to say other people could look at it differently. So why did we move today? I would say point to a couple things. First of all, gradual cooling in the labor market has continued. Unemployment is now up 0.3 from June through September. Payroll jobs averaging 40,000 per month since April. We think there's an overstatement in these numbers by about 60,000, so that would be negative 20,000 per month. And also, just to point out one other thing, surveys of households and businesses both showed declining supply and demand for workers. So I think you can say that the labor market has continued to cool gradually, maybe just a touch more gradually than we thought. In terms of inflation, it's come in a touch lower, and I think the evidence is kind of growing that what's happening here is services inflation coming down, and that's offset by increases in goods, and that goods inflation is entirely in sectors where there are tariffs. So that does build on the story, and so far it's only a story, that that the goods inflation, which is really the source of the excess at this point, almost more than half the source of the excess inflation is goods, is tariffs. And you've got to say then, so what do we expect from tariffs? And I would say that is to some extent down to looking for broader economic heat. Do we see a hot economy? Do we see constraints? Do we see what's going on with wages? You saw the ECI report today. It doesn't feel like a hot economy that wants to generate, Phillips curve kind of inflation. So we look at all those things, and we say that this was a decision to make. It obviously wasn't unanimous, but overall that was the judgment that we made, and that's the action we took.
Just on the ample reserves point, how concerned were people around the table about some of the tensions we've seen in money markets? Thank you.
I wouldn't say concerned. So what really happened is this. Balance sheet shrinkage, sometimes called QT, went on. We had a framework in place for monitoring it, and nothing happened. The overnight reverse repo facility went down pretty much close to zero. And then beginning in September, the federal funds rate started to tick up within the range, right? And it ticked up almost all the way to interest on reserve balances. There's nothing wrong with that. What that's telling you is that we're actually in an ample reserves regime. So, we knew this was going to come. When it finally did come, it came a little quicker than expected, but we were absolutely there to take the actions that we said we would take. So, and those actions are today. So, we announced that we're resuming reserve management purchases. That is completely separate from monetary policy.
It might drop again.
Supply of reserves out there.
It's looking strong, though.
The answer to that is, if you look ahead, you'll see that April
Worth shorting
15th
again in some lottos.
Our framework is such that we want to
Sweep
have
of the
ample
high.
reserves even at times when reserves are at a low level temporarily. So that's what happens on tax day. People pay a lot of money to the government, reserves drop sharply and temporarily. So this seasonal buildup that we'll see in the next few months was going to happen anyway. It was going to happen because April 15th is April 15th. There's also a secular ongoing growth of the balance sheet. We have to keep reserves, call it constant as it relates to the banking system or to the whole economy. And that alone calls for us to increase about $20-25 billion per month. So that's a small part. That's going on. It's also happening
Short again.
in the context of a temporary few months
Playing with profits.
front loading to get reserves high enough to get through the tax period in mid-April.
Size
So
for
that's what's
loss.
happening there.
Andrew.
Thanks, Mr. Chairman. this is the last post-FOMC press conference before an important Supreme Court hearing next month. Can you talk about how you're hoping the Supreme Court will rule? And I'm just curious why the Fed's been so reticent on such a pivotal matter.
It's not something I want to address here, Andrew. We're not legal commentators. It's before the courts, and we think we don't think that we help matters by trying to engage as a public.
Market's still
I'll
ripping.
give you a mulligan though.
No, thanks. I don't know if that means I get 3 questions, but
No, just one more.
I guess I wanted to come back to the 1990s question, and like, do you see that as a useful model for thinking about what is happening in the economy right now?
I don't think it rises to that level. So I did think that in 2019, where we cut 3 times, but this is such a unique situation. It's not the 1970s, let's put it that way, but we do have tension between our 2 goals. And so that's just unique in my time at the Fed, and I think going back a long ways, we haven't had that. In our framework, as you know, says that when that's the case, that we try to take a balanced approach to the 2 things, and we look at how far they are and how long it would take to get them back to each of them back to the goal. And that's a very subjective analysis, really, but it just tells you you've got to. And I think ultimately what it says is when they're broadly equally threatened or equally at risk, you should be kind of neutral, because if you're either accommodative or tight, you're favoring one or the other goal. And so we've been sort of moving in the direction of neutral. Now we're in the range of neutral. We're in the high end of the range of neutral, I would say, and that's what we're doing now. It so happened that we've cut 3 times. That we haven't made any decision about January, but as I've said, we think we're well positioned to wait and see how the economy performs.
Edward.
Thanks, Mr. Chairman. Edward Lawrence with Fox Business. I wanted to ask you, the inflation expectations
Beast
has
mode in the
come
markets.
down in your SEP report. Do you see the tariff price increases as passing through in the next 3 months? Is it a 6-month process that we're looking for that to end? And then because of that, is jobs the threat to the economy?
So with tariff inflation, there's the announcement of a tariff, and then they start to take effect, and then it takes some months. Goods may have to be shipped from other parts of it may take, quite a while for an individual tariff to take its full effect. But once it's had that effect, then the question is, isn't that just a one-time price increase? So we actually look at it, all of the announcements and what you get from all that. You see sort of for each one of them, there's a time period, and then it's fully in. So if there are no new tariff announcements, and we don't know that, but let's assume there are no major new tariff announcements, inflation from goods should peak in the first quarter or so, right, or roughly. We haven't been able to predict this with any precision. No one is. But call it the first quarter or so of next year should be the peak. And from here, it shouldn't be big. It should be a couple tenths or even less than that. We don't really have precision on this. And after that, again, if there are no new tariffs that are being announced that will take 9 months to get fully in, and 9 months is also an estimate, then you should start to see that coming down in the back half of next year.
And I want to see if I could address sort of the elephant in the room. The president's been talking openly about a new Fed chairman. Does that hinder your current job right now or change your thinking at all?
No.
Mike.
No mulligans for it. Michael McKee from Bloomberg Radio and Television. 10-year rates are 50 basis points higher than when you started cutting back in September of 2024, and the yield curve basically has been steepening. Why do you think that continuing to cut now, especially in the absence of data, is going to bring down the yield on the thing that will move the economy the most?
So we're looking at the real economy and focusing on that. And you've got to, when the long bonds move around, you've got to look at why they're moving around. If you look at inflation compensation, it's very, that's one part of it is inflation compensation break-evens. And, they're at very comfortable levels. They're at levels consistent once you get out past the very short term now. break-evens are at at quite levels that are quite consistent with 2% inflation over time. So there's nothing happening with rates going up out there that suggests concern about inflation in the long term or anything like that. I mean, I look at these things pretty regularly. Same thing with surveys. Surveys are all saying that the public understands our commitment to 2% and expects us to get back there. So why are rates going up? It has to be something else. It must be, an expectation of higher growth or something like that. And that's a lot of what's been going on. I mean, you saw a big move, toward the end of last year, which was not to do with us. It was to do with other developments.
Well, you just mentioned that the public is expecting you to get back to 2%, and Americans overwhelmingly are citing high prices, inflation, as their number one concern. Can you explain to them why you're prioritizing the labor market, which seems relatively stable to most people, instead of their number one concern, inflation?
So we, as you know, we have a network of contacts in the U.S. economy, which is really unmatched if you go through the 12 reserve banks. So we hear loud and clear how people are experiencing really costs. It's really high costs. And a lot of that is not the current rate of inflation. A lot of that is just embedded higher cost due to higher inflation in 2022 and 23. So that's what's going on. And so the best thing we can do is restore inflation to its 2% goal, and our policy is intended to do that, but also have a strong economy where real wages are going up, where people are getting jobs and earning money, and we're going to need to have some years where real compensation is higher, it's positive.
They rip in this market.
Positive, so nominal wages are higher than inflation, for people to start feeling good about the affordability issue. And, so we're working hard on that. We're trying to keep inflation under control, but also support the labor market and strong wages so that people are earning enough money and feeling economically healthy again.
Victoria.
Hi, Victoria Guida with Politico. Just to follow up on that, I mean, this is now the third time that you've cut this year and inflation is around 3%. So is the message that you're sort of trying to send with that you're okay with where inflation is for now, as long as people understand that at some point you still want to get back to 2% because inflation is relatively
Start
stable?
cratering.
Everyone should understand, and the surveys show that they do, that we're committed to 2% inflation, and we will deliver 2% inflation. But it's a complicated, unusual, difficult situation where the labor market is also under pressure, where job creation may actually be negative. Now, supply of workers has also gone way down, so the unemployment rate hasn't moved that much. But, it's a labor market that seems to have significant downside risks. People care a lot about that. That's their jobs. That's their ability, if they get laid off or if they're entering the labor force, to find work. So that's really important to people. The story with inflation, and we're well aware that this is a story at this point, is that if you get away from tariffs, inflation is in the low 2s, right? So it's really tariffs that's causing most of the inflation overshoot. And we do think of those as likely to, in the current situation, as likely to be a one-time price increase. Our job is to make sure that it is, and we will do that job. But right now, you've got this difficult balance, and there are risks to both sides. There's no risk-free path. If it was just inflation and the labor market was just really strong, and then rates would be higher, as they were for more than a year. We didn't have to worry about inflation. Sorry, about the labor market, because the labor market unemployment was very low. If you remember, when inflation was very high, there was a labor shortage, so we could focus entirely on inflation. Now it's different. We actually have risks to both, and I think we're doing the best we can for people. They also care about their jobs. They do care about affordability, and the best thing we can do there is both to support economic activity, but also, make sure that when tariff inflation goes down and disappears, inflation lands around 2%.
Elizabeth.
Thanks so much, Elizabeth Schulze with ABC News. Just to follow up, you keep talking about job growth being negative. Why do you think job growth is so much worse than some of the official data? Why do you think job growth is, to follow up on your comments about job growth, why is it so much worse than the official data is suggesting?
Oh, well, we know, I think this is, I don't think this is particularly controversial. It's very difficult to estimate job growth in real time. They don't count everybody, they have a survey. And there's been something of a systematic overcount. And so we expected, and they correct it twice a year. So the last time they corrected it, we thought the correction would be 800,000 or 900,000. I won't get the numbers exactly right. And that was exactly what happened. So we think that has persisted. And so there's an overcount in the payroll job numbers, we think, continuing, and it will be corrected. I don't have the exact month in my head right now, and that's just, I think forecasters generally understand that. So, and we think it's about 60,000 a month, so 40,000 jobs could be negative 20, and that could be wrong by 10 or 20 in either direction. But in any case, but the thing is, that's job creation in a way. That's demand. Labor supply has also come down quite sharply. So, if you had a world where there's just no growth in workers and you really don't need a lot of jobs to have full employment, some people argue that's what we're looking at. But I think a world where job creation is negative, I just think we need to watch that situation very carefully and be in a position where we're not, pushing down on job creation with our policy.
When we're talking about supply, we have seen major American employers like Amazon cite AI in job cuts. How much right now are you factoring in AI into the current weakness in the job market?
So it's probably part of the story. It's not a big part of the story yet. We don't know whether it will be. But, for example, if you look at, you can't miss the big announcements of layoffs and also companies saying that they're not going to hire anybody for a long time, and they cite AI. That's all clearly happening. At the same time, people are not filing for unemployment insurance, and since job creation, job finding rates are extremely low. If there were big numbers of layoffs, you'd expect the continuing claims to go up, and you expect new claims to go up. It really haven't much, so it's a little bit curious. But longer term, though, the question is, what are we going to see here? And we don't know, but it's it may be that in past technology, really significant technology innovation eras, you have seen some jobs destroyed and other jobs made. Ultimately, what's happened for a couple hundred years is when you get through all that, you have higher productivity and you have new jobs, and there are enough jobs for people. This may be different. It's every time we have a wave of technology, we think, oh, this could put a lot of people out of work. What are they going to do? In the past, there's always been more work and higher productivity, and incomes have risen. What will happen here, we're going to have to see. But right now is such early days. We don't think we see much. It's certainly not showing up in layoffs yet.
Thank you, Chair. And Curran, Bloomberg News. Given the breadth of views on the policy committee, why is there such a division of views between
on the policy what? On
the committee.
Thank you.
Why is there such a division of views between the presidents and the board members?
It's not so stark as that. The views are more varied on in each group as well. There's some of that, but I would say they're also governors and they're people on both sides in both groups. I wouldn't put too much in that.
Okay, and just to follow up, please, given your growth upgrade, how would you factor in, or what would be the economic impact if the Supreme Court is to strike down the tariffs that they're currently hearing, please, in terms of growth and inflation? Thank you.
I really don't know. It would depend. It would depend on a whole bunch of things we don't know. So I can't really help you there.
Christine. Thank you.
Thank you, Chair Powell. Christine Romans, NBC News. I wanted to ask you about how the higher income households are really driving spending right now. They're backed by home equity and stock market wealth, but lower income consumers are really struggling with the accumulation of 5 years now of rising prices. It's price levels, not really the inflation rate, holding some of these families back. How sustainable is this so-called K-shaped economy, and what are the Fed's thoughts on whether that's a risk going forward?
So we do, through our vast network of contacts and just through our observation of what's going on in the economy, we hear about this a lot. If you listen to the earnings reports for consumer-facing companies that tend to deal with low and moderate income people, they'll all say that we're seeing people, tightening their belts, changing products that they buy, buying less, and that sort of thing. And so it's clearly a thing. It's also clearly a thing that, asset values, housing values, and securities values are high, and they tend to be owned by people more at the higher end of the income and wealth. So as how sustainable it is, I don't know. Most of the consumption does happen by people who have more means. I think the top third accounts for way more than a third of the consumption, for example. So it's a good question how sustainable that is. The best we can do is to have a price stability and a strong labor market. And what we saw, for example, what we saw at the end of the very, very long expansion that ended with the outbreak of the pandemic, we saw that it was 10 years and 8 months or something like that, the longest one in recorded history. In the last 2 years, most of the largest part of the wage gains were going to people in the bottom quartile, the bottom part of the low and moderate income. So, having a strong labor market for a long period of time is really, really good from a social standpoint. It's helping people at the lower income levels, and that's what we all want to get back to. But we got to have price stability, and we got to have full employment, maximum employment.
And just quickly, you mentioned the housing market remains kind of weak. With these rate cuts that we've seen, is there a chance we're going to see more affordability in the housing market so more people can maybe enjoy that part of wealth creation? I mean, the average age or median age of a first-time home buyer is now 40 years old. That's the highest on record.
Yeah, so the housing market faces some really significant challenges. And I don't know that, a 25 basis point decline in the federal funds rate is going to make
BTC
much
ripping.
of a difference for people. Housing supply is low. Many people have very, very low rate mortgages from the pandemic period, and they kept refinancing and caught the really low. So it's made expensive for them to move. And, we're a ways away from that changing. Also, we haven't built enough housing in the country for a long time. And so a lot of estimates suggest that we just need more housing of different kinds. So housing is going to be a problem. And really the tools to address it are we can raise and lower interest rates, but we don't really have the tools to address, a secular housing shortage, a structural housing shortage.
Chris.
Thanks. Chris Rugaber, Associated Press. You mentioned on inflation, services inflation being low, goods inflation looking like maybe it'll peak. We had the wages report you mentioned today showing moderating wage growth. Where are there inflation risks? It looks like inflation is cooling, in your view. At the same time, you have potentially negative hiring. Why not? Why aren't we hearing more about maybe more cuts in this environment?
Well, I think the risk in inflation is pretty clear to see, and that is, we see higher inflation. As I mentioned, most of the inflation over target is from goods, and we estimate, we expect, most of us, that inflation will be a one-time price increase and then come down. We just came off an experience where inflation turned out to be much more persistent than anyone had expected. Is that going to happen now? That's the risk. The risk is either that tariff inflation just turns out to be more and more persistent, maybe because companies who are now holding back from passing through the tariffs will just keep doing that. So you see that. I think the other possibility is less likely, and that is just that the labor market gets tight or the economy gets tight, and you see just traditional inflation. I don't see that as particularly likely. But so I think, again, all across the committee, people see the picture pretty similarly, but see the risks quite differently. And some people do see the inflation risk, and I wouldn't dismiss that case. I don't dismiss that case, but you've got to make an assessment, and this is the assessment we made.
Hi, Chair Powell. Neil Irwin with Axios. So this has come up a couple of times today, but to be clear, do you believe that we're experiencing a positive productivity shock, whether from AI or policy factors or whatever? And how much is that driving the higher GDP projection in the SEP?
So yeah, I mean, I never thought I would see a time when we had 5-6 years of 2% productivity growth. This is higher. This is definitely higher, and it was before it could be attributed to AI. I also think if you look at what AI can do, and if you use it in your personal life, as I imagine many of us have, you can see the prospects for productivity. I think it makes people who use it more productive. It may make other people have to find other jobs, though. So it could have productivity implications while also having social and labor market implications that we don't have the tools to deal with. But yes, I think we're definitely seeing higher productivity. I think it's a little quick to be saying it's generative AI, but I don't know. The pandemic may have induced people to do more automation and do more things with computers to replace people, and that raises productivity, output per hour.
Does that imply a higher neutral rate, and therefore the policy might be a little easier than it seems?
All things equal, yes, but all things aren't equal. There are many things pushing in different directions on where the neutral rate would be. But yes, that argument does come up.
Matt Egan.
Thanks, Chair Powell. Matt Egan with CNN. After today, you only have 3 more meetings at the helm of the Fed. Since becoming Fed chair, you've seen multiple trade wars, the pandemic, COVID reopening, period of high inflation. I know your term's not up as chair until May, but I'm wondering if you've given any thought to what you want your legacy to be.
My legacy. My thought is that I really want to turn this job over to whoever replaces me with the economy in really good shape. That's what I want to do. I want inflation to be under control, coming back down to 2%, and I want the labor market to be strong. That's what I want. And all of my efforts are to get to that place. They have been all along, but ultimately, that's what I'm. And it's I don't have time to think about bigger things. I hope many years ahead to worry about that, but there's enough to do.
Relatedly, have you given any more thought, and can you tell us any more about your plans on whether or not you plan to stay on the Fed Board of Governors even after your term as chair expires?
Again, I'm focused on my remaining time as chair. I haven't got anything new on that to tell you.
Go to Mark for the last question.
Chairman Mark Hamrick with Bankrate. Even while many price levels remain elevated, the reductions in the federal funds rate means that savings rates, or yields to be more precise, have peaked while key borrowing rates remain elevated. And that's, as we've discussed here, as many Americans struggle with liquidity or emergency savings challenges. Is that just collateral damage?
Volume increasing, guys.
Consequence because your tools are limited in addressing individual or household liquidity constraints, insufficient money in the bank?
I don't know.
This is where they're going to sell us off, or they're going to push us to 690. Volume trends are increasing, a little bit of liquidity grab there. Let's see what happens.
And maximum employment, and those things are hugely valuable to all the people we serve. When we raise rates to bring inflation down, that does work by slowing the economy, but we've moved back our policy back down to where it's certainly not strongly restrictive at this point. I think it's sort of in the range of neutral. So that's what we're trying to do, and I would want people to understand that. I think what people are feeling is the effect of higher prices. There was a global wave, sort of every large economy in the world, sort of every large open economy market-based economy in the world had a wave of inflation that looked an awful lot like ours. We actually came through better than any other country, substantially better. We had higher growth, we had better labor market, and this is really due to the American economy. We have an extraordinary economy, and people are innovative, they work hard, and so we're all of us who work in economics jobs are really fortunate to have the U.S. economy. So, thank you very much.
Guys, that's the press conference. We'll see if we get any sort of a flush. Overall, strong price action from the S&P 500. Final 38 minutes. Let's see if the market makers sell us now. But damn, that was a crazy tape. Crazy strength in the market. Yeah, market's strong, guys. Market is strong. That's why you got to play with small size on FOMC. Small size. Everyone wants to make those grand slam hits, but you get blown out and then you're pissed off for the rest of the week, and then you can't trade and your psychology's all messed. Obviously, if you hit that one grand slam, you're feeling like a boss, but it's not worth it, man. Been around the block. You gotta be here for a long time. If you can stay in the markets for a long time, you'll make money. Just to put into perspective, I'm trading with 500K here, well, 650, and I'm only taking 10 contracts here or there. Nothing that's gonna kill me that I can sleep at night. So tiny. I don't go in with crazy size on these 0DTs or short data contracts. So you want to just be cautious with your risk management. And I'm playing with profits on the second short. The first short crushed it, made a ton. Playing with profits on the second 685s. Am I getting cooked right now? Yeah, I am. Down about 50%. More. But that's why they're lottos. That's why I'm playing with profits. Yep. And again, it's a matter how the markets close here. So obviously the market is holding very strong technical structure. Very, very strong. But we could definitely see some selling in the market late into the close. This is where they should reject us. If it's a reversal, they're going to sell us hard in the final 30 minutes. But so far, price action's holding quite steady right now. Pretty steady. I mean, nice daily chart candle. Market is actually very strong. Quite impressive. Really nothing crazy that Powell mentioned or said that's alarming. There's the alarming thing is that he says there's risks to inflation to the upside and risks to the labor market to the downside. So kind of his two levers that he pulls are almost conflicting each other. You didn't follow your rules, but now you're up 1K. Nice. There you go. If it works out, you feel great, right? But it's those times where it doesn't work and you're just like, oh, why did I do that? It's crazy. All right, so it looks like they might try to keep this market pinned here. Market is actually strong. Was rewarded for breaking your rules. Yeah, sometimes it goes that way. Sometimes it goes that way. Sometimes it's better to be lucky than good. Old saying. But your dollar crumbled, your yields crumbled, your VIX got slapped right down. Crazy. Rocket Labs absolutely flying up 8.59% on RKLB, guys. What a beast. What an absolute beast. I love Rocket Labs, guys. That thing is ripping. Carvana's pushing. Webull turned green. Mega Cap Tech just flew. Nike having a day and a half. NKE up 4.24%, guys. One of our other longs. I love it. Nike squeezing. Micron Western Digital absolutely flying. Crazy. Constellation Brands, UPS flying right now. Looks like they're going to keep this market pinned, guys. I don't know if we're going to even sell off anymore. Super strong price action for now. Still got 30 minutes left, but so far they're looking like they want to keep the bulls paid. Wow, look at, damn, some super strength, guys. UPS up 3%. That chart pattern is looking so juicy, UPS, guys. That daily chart almost tapping, it did tap, almost tapping 100 today. Insane price action. Constellation Brands has made a huge move off of the lows. Constellation Brands is already up about 17.5%. Excellent price action for STZ. Nice price action. Lululemon made a nice bullish reversal. That's up a couple percent. I want to see Lulu next year 250. Lulu next year 250 would be juicy. It would be. Final 30 minutes. Let's see if they want to. So they've just crushed so much vol on the put side. So a lot of market makers don't have to pay out as much right now. Puts have just decayed and burned away. They've paid the calls. Final 30 minutes, guys. 30 minutes left in the tape. You got SPY up 0.7, QQ up 0.5, IWM up 1.86. IWM leading the charge to the upside right now. Nice. Arsenal's winning their game. Good to see. Who scored for us? Adweke. Perfect. Holding pretty strong here, guys. The markets. Very strong price action. QQQ still acting pretty resilient here as well. Crazy. IWM softening a touch. Still got Oracle and AVGO earnings after the tape, after the bell. Those will be interesting as well. Some pretty big market moving stocks. Yeah, Microsoft's weak. Microsoft is weak for sure. It's definitely lagged. I got stopped out on the rest of those commons break even. That's why we took profits off that 482.30 area. They are squeezing that S&P, guys. New high of day on SPY SPX. Ripper. Mr. POTUS is speaking, guys. President of the United States. POTUS speaking. Oh, take a seat here. ABGO ripping into the close, 412. Crazy price action on Avgo. 2 minutes, you got Avgo, AVGO ripping to the highs. Semiconductors are still super strong. Nvidia has pulled back on its 10-minute chart, so that really hasn't participated in the bid. Carvana still ripping here. Carvana is now interesting for a short, guys. Anyone shorting Carvana here? I think I might be ready. Guys, I'm going to get into some Carvanas. Let's see. It's the ticker I was looking at. It's getting pretty extended up here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days of consecutive upside. Might be a new record. Might be a new record on Carvana. Crazy. Might be a new record. I mean, it can go maybe a little bit higher, but I have a key trend line going all the way back to this high pivot in 2023. But wow, it's going parabolic. I mean, 80 RSI on the daily. Nice negative divergence. It's got a negative divergence in the hourly. Interesting. Pretty crazy. Yeah, I was looking at puts, but they're still pretty juiced. They're still pretty juiced. Still a lot of bullish charts out there, guys. Still a lot of bullish charts. Constellation Brands hitting 158. Nice. STZ. BTC still grinding here. MSTR is trying. What's we got going on? Strong day in JP Morgan, Wells Fargo. Excellent day. Wow. Financials crushed it today. Well, unfortunately, those last little 685 puts are getting cooked. Not going to make us money. Good job if you caught that initial move. I pretty much gave back all of those profits in this last trade. I thought we were going to get another dip down. Overall, still positive day for myself on the session. Lots of profits taken in Rocket Labs today. And we'll see what the market has in store for us. Usually there can be a continuation move or a big reversal the following day on Fed. So all eyes will be on the markets. The IWM has been quietly dripping a little bit lower here into the close, even though the S&P is staying relatively strong. You've had the VIX crater. You've had the dollar absolutely fumble the $99 area. You've got crude oil looks to be trying to bottom out. Natural gas bouncing. Gold and silver ripping. Bitcoin trying to find a bottom. Your 2 and 10-year yield spread differential, guys, is crazy today. 2 and 10 is crazy today. Robinhood isn't letting you buy calls on SPY. They're fucking closing my 690s. Never seen that. Weird. What does that mean? They're not letting you buy calls. They might mean the market's probably going to fumble here into the close. They're probably protecting their clients a little bit. Yeah, Robinhood's manipulating, I guess so, for sure. But nice performance, guys, in some of our other longs like UPS, Lulu, STZ. Those stocks are quietly creeping to the upside here. I like those positions still heading into the new year a lot. Western Union has had a stellar day, ticker WU. Wow, Micron Western Digital strong. They are beasts. ACN, nice day. Western Union up sharply over 4% on ticker WU. Impressive price action for sure. Netflix just sucks down here. I really expected Netflix to bounce, but Netflix not doing things, not doing it for Netflix. Crazy. Holy, look at that spike on SPY. What the heck was that? Talk about manipulation candle. Oh my goodness. Did anyone see that? That's why they didn't let you buy calls. Who the heck? Like, how did they even push SPY up that much? Did that actually just happen? That's insane. No way that happened on SPY. That's got to be fake, right, guys? Yeah, SPX didn't wick up there. That's a fake print on SPY. That came out of nowhere. I was like, what? No way. That was a fake print on SPY, guys. That candle did not happen. Not a chance. That was just weird. That was very weird. Oh, I guess it was MOC. MOC just came out, so yeah. Maybe that was real. I looked away for a second, now I see that. It's called a foot. Yeah, I know it's called a footprint. They leave it a little bit of a smoke signal to the market, but I guess that was an MOC, so it could be real. It's just weird that SPX didn't show that candle. That's why I think it's a little bit of a fake footprint. All right, SPY's getting a little bit heavier here. It's still pretty strong on the overall session. So they're slow dripping it now, not wanting to pay out the puts too quickly, just letting the time kill it. Bitcoin getting a hard rejection. BTC coming in pretty hard from that 93.5 level. Just dropped $1,000 in a blink of an eye there, BTC. Yep. Fucking Netflix. Carvana's coming in. Bitcoin's basically back to the negative side on the tape. Bit of an hourly reversal candle on your SPX here. Carvana drilling pretty hard right now. SPX. SPX open on the right screen. Nvidia's been moving inversely to the market recently. I mean, I'm noticing that. Like right now, Nvidia got that big stick up while the market's selling a little bit. Yeah, the W formation played out. It already played out today. Again, technical patterns off of big days like this, macro days, are tough because they play out quickly, but they can also fail, right? But as of now, overall, it's still a decent solid session for the indices, despite they've come in from the highs a little bit. The markets held majority of their bullish price action. Bit of a nasty topping tail forming on your hourly SPX and 10-minute SPY chart, but nothing crazy, guys. Adobe earnings tonight? Yeah, honestly, I feel like Adobe's always a bull trap. You know, I've tried this name, but it just does not want to firm up. Is it oversold? Is it sitting on support, a massive point of control? Yes, but do I still think it can make one more move to the downside? I do. I still think it wants 305, 306. So I don't really like Adobe, to be honest. It's just one of those names that, I don't know, something's wrong with it. Investors just hate Adobe right now. I think maybe into 2026 it'll be a good position. 2026. All right, guys, that's a wrap. Good job on the initial short. Unfortunately, the second short did not work out. It was kind of almost a nothing burger day. It wasn't really that big of a push, although it was a nice rally to the upside as FOMC. Kind of disappointed today. It wasn't that crazy volatility. Into the end of the day, you can see the markets pretty much gave back a decent chunk of it. You can see that it basically moved to the high of the candle where we got the interest rate decision. So all of this was just froth and extra squeezing. But nevertheless, good session for us. We did nail some earlier SPY calls. We also took that initial dip on the markets. We've closed some swing trading profits in the swing trading group. And we'll see you all tomorrow, guys. Take it easy. Thanks, Surf. You too. Take it easy, Peter. Take it easy, JP.